everyone, Christine Caprillion. I'm a realtor at Linden Properties, and I want to talk to you today why FHA loans are sexy again. If you haven't noticed, last 2 years we've had a huge seller's market for homes going, the price of a home just some places more than doubling, but homes going above asking, all cash offers, cash conventional, as is, no inspection, get out in 10 days, here's your cash, let's go. And that market is completely shifted. We have gone from a seller's market to more of an even keel buyer and seller's market. There's a little bit more negotiation going on, a lot less offers. So now we've been hearing you don't have those 10, 20, 30 offers on the table anymore, all cash. You are getting maybe 1 or 2 offers, and some places aren't getting any. So now with that seller with their house in the market, that FHA loan looks a lot more attractive. So that being said, on the seller side, that loan has become a lot more attractive and a lot more viable in the real estate market right now. So for those of you who have been sitting out of the real estate market, then really been wanting to buy and have been outbidded and outpaced in this market by out-of-town buyers and people with more money in the game, your FHA loan is now a more viable option, and it is becoming a game changer in this market. So what's attractive for a buyer with an FHA loan? First and foremost, minimum credit score of 500. That's not bad considering 500 is a pretty low credit score. But with that 500 credit score, you're going to need at least 10% down and about 6 to 9 months of reserve. So 6 to 9 months worth of mortgage payments with 10% down, plus any fees to originate and push through a loan and all the closing costs and whatnot that comes with buying a home. But that's what you'll need for that type of credit score. But you can start off at a 500 credit score as long as you have all the above. In addition, if your credit score is 580 or higher, you only required a 3.5% down payment. And a credit score of 600 or higher, you don't need to prove that you have reserves. So a little bit more attractive, a little bit more sexy, not as hard as a conventional loan. Another great point about FHA loans that are a little bit more attractive and sexy to the buyer is that on average they're 1.5% lower than a conventional rate loan. Now with interest rates being at a historic low these last few years, that wasn't as attractive. But now with them being a bit higher, the FHA loan looks a lot better. Conventional loan was more attractive because less requirements at closing and versus cash offer. But right now with it being lower than a conventional loan on average, that is a lot more attractive. You get a little bit more for your money, a little bit more purchasing power for your money. And with inflation, that puts in a nice buffer because we don't know where prices are going to go. People hear that they're going to go up on food prices. I'm pretty sure they will. A lot of prices have changed, so you need to kind of put in that buffer. So having that extra 1.5% will really help, especially on a big purchase as a home. Another thing is that you are able to buy down points, and 1 point is 1% of the loan. So if you're borrowing $400,000, 1 point down, buying it from maybe a 5.5 to a 4.5% would cost you $4,000 on average. So that is another attractive thing. As for today, August 10th, 2022, rates on a FHA loan are 5.25%, somewhere between 5.25% and 5.5%. So that's historically still very low and still very attractive. When I first bought my home in 1999, I think interest rates were somewhere between 6 and 7.5%, if I remember correctly, and I think we bought down a point. So we got it to 6 something, which was like, yay, but still a lot more than 5.25, or it's still 1 or 2 percentage points above that. And you can still buy that down. Another thing that you need to keep in mind too, even if you think interest rates are really high, they really aren't. Historically, they've been a lot higher. During the early 1980s, interest rates were as high as 18% on a mortgage. That is insanity. 1991, they were as high as 11%. these last few years, they fluctuated. The Fed has kept interest rates low to stimulate the economy. The economy got overstimulated. It needs to be understimulated. They raised the rates, and housing prices are adjusting toward that. Homeowners are realizing that they have to make those concessions. So things are starting to even out, and that's really good news. That's really good news for everybody all the way around. One more thing I'd like to say is if you've been renting and you've been putting off home buying, you're still being scared because the media tells you to be scared. It's like, scared, just rates are going up. The Fed raised the rate, now there's 0.75%. Oh my God, the sky is falling. Don't listen to the news. Turn it off. Turn off the news. Best thing you can do, turn off the news. Don't listen to them. They bank on scaring you. Everything's about fear because there's that, they suck you in that way. Oh my God, what's happening next? Oh my God, what's happening next? And they keep you in a constant state of fear. It's like watching, 90 Day Fiance. You get sucked in. Don't believe it. It's not all like that. Be realistic. Sit down and talk with a real estate professional. Sit down and talk with somebody a real estate professional who can help you with setting you up with a loan officer and figuring out what you can afford, looking at your budget, figuring out what you can afford, what is your credit score, what are you paying now in rent? What are you paying right now in rent? I mean, some places they're more than a mortgage. They're double a mortgage, and they go up every year. If you're renting a home, if you're renting an apartment, I know apartments down the street, 1 bedroom, 2 bedroom, are going for $2,200-$2,300, if not more, depending on the place. That's insanity. You have nothing to show for it. You have nothing to write off at the end of the day. You're throwing money away for the privilege to live somewhere without anything in the end. You're only building equity and wealth for the person you're renting from. Why not turn that around and build that for yourself? If you're looking to buy a home and you want to figure out how to start going out doing it, contact me down below. I'm going to put my contact information. I'm going to pick a link and check the boxes if you're interested in buying, selling, relocating. I can help you with that. My real estate agency is part of a group that's part of the top 1% of all real estate agencies in the world. And we can find you a home anywhere. Even if you don't want to relocate, you want to buy something somewhere else, another country along the coast, let me know. Investment property. I'm here to help, happy to guide you through all this, guide you to your next home, help you realize your dreams for you and your family. And it has been a pleasure talking to you. If you have any more questions, if this video was helpful, let me know down below. If you want to know any other information, let me down below. Please comment, be kind. It is my first live video, and I'm hoping to get more of these out. It's a confusing time right now. We haven't seen these times since, like, I want to say the Jimmy Carter years, when interest rates started flying and inflation went through the roof, the 70s and early 80s. And I lived through the Jimmy Carter years. Yeah, I remember those days. For those of you who don't, you can tell your grandkids about it and your children about it. It's fun. It's fun to do that. But again, I'm here to help. I'm happy to help. I love helping people, and I love helping people realize their dreams. Have a wonderful day. Bye.